All right, welcome to the explainer. So, Robinhood just dropped what looks like a blockbuster quarter. But you know the real story? It's not really in the headlines. It's in what the top execs are doing with their own money. Okay, first, let's set the stage a little bit just so you understand the stakes here. Robinhood stock has had a phenomenal year. I mean, even before this latest report, the stock was already up a staggering 277% year to date. That kind of momentum it's incredible. All right, so here's the plan. We're going to start with those awesome earnings numbers, then we'll dig into the strategy that got them there. After that, things get interesting. We'll look at a pretty contradictory signal coming from inside the company, stack that up against what Wall Street is saying, and wrap it all up with a big question for any investor. Okay, so let's jump in. On the surface, Robinhood's Q3 results look like a massive, undeniable win. We're not talking about just meeting expectations here. They absolutely blew them out of the water. And you can see just how clearly they beat the street here. Analysts were looking for revenue around $1.19 billion. Robinhood came in with $1.27 billion. They were forecasting, 53 cents a share? Nope. The company posted 61 cents. Just a total clean sweep. And this is the bottom line. This isn't just about money coming in the door. It's about pure profit. Net income shot up to $556 million. Now, to put that into perspective for you, that is a huge jump from $150 million in the same quarter last year. We're talking explosive growth here. So the big question is how they pull this off. Well, a huge part of the story is a big strategic shift. See, Robinhood isn't just that simple stock trading app anymore. They're aiming for something way bigger, really leaning into what some analysts are calling a casino-like market environment. And you don't have to take my word for it. You can hear it straight from their CFO, Jason Warnick. He pointed right to diversification as the engine driving all this growth. He's talking about major new business lines that are already bringing in some serious cash. And man, this strategy is aggressive. They're trying to become a full-on wealth management company, competing with the giants like Fidelity and Schwab. But the real fuel for this quarter, it came from their newer stuff. I'm talking about crypto. Their crypto revenue alone jumped, get this, over 300%. A lot of that's thanks to their big acquisition of the crypto exchange Bitstamp. It's a huge move that just doubles down on that high-energy, high-volatility trading. Okay, so let's recap. The company's performance is amazing. The stock is flying high. The whole diversification strategy looks like it's working perfectly. But when you start to look at what the company's own leaders are doing with their stock, well, that's when a very, very different picture starts to emerge. And this just raises a huge question, right? Are the actions of the executives, the people who know this company better than anyone, do their actions actually match up with this super positive story we're hearing? Well, the answer is kind of startling. In the last 6 months, insiders at Robinhood have made exactly one open market purchase of stock. One. And in that same period, 73 sales. That ratio is, it's incredibly one-sided. Now look, insiders sell stock for all kinds of reasons. Totally normal. Personal diversification, tax planning, you name it. But the key thing to look at here is the sheer scale of these sales. The two co-founders, CEO Vladimir Tenev and Baiju Bhatt, between just the two of them, they've sold over $1 billion worth of their stock. And this isn't just one or two people. It's a trend right across the top of the company. The CEO sold about $630 million worth. The other co-founder, over $422 million. And it goes on. Even the CFO and the chief legal officer, people who are right at the center of the company's strategy, they've cashed out tens of millions of dollars in stock too. So what you've got here is this fascinating and honestly kind of confusing situation for anyone looking at the stock. You've got two completely opposite signals about where this company is headed. Okay, so on one hand, you've got Wall Street analysts, and they are overwhelmingly bullish. The consensus rating is a moderate buy. You've got big names like Bank of America raising their price targets. 13 different firms are basically telling the public, hey, you should buy this. Then, on the other hand, you have the insiders, the people who actually run the company, and they're selling their shares at a truly astonishing pace. And just to add one more little wrinkle to all this, public data shows a small kind of countersignal. Over the last 6 months, the few members of the U.S. Congress who've traded Robinhood stock, they've only been buying. No, we should be clear. We're talking about amounts that are a tiny, tiny fraction of what the insiders are selling, but still, it's interesting. So, where does all this leave us? It really feels like a classic case of conflicting information, doesn't it? The hard data and the human behavior, they seem to be telling two completely different stories. So here's the bottom line, the real tension in all of this. The company's performance? Exceptional. The strategy? It's clearly paying off. But the people in charge are selling huge amounts of their own stock at the exact same time the experts on Wall Street are telling the rest of us to buy in. And that really brings us to the final question here. When you're trying to figure out where a company is going, what do you trust more? Do you follow the stellar performance and all those glowing reports from the analysts? Or do you follow the actions of the people who know it best from the inside? That right there is the billion-dollar question.